Welcome to DWS Market Update. On June the 6th, the European Central Bank lowered its benchmark interest rate from 4% to 3.75%. Interestingly, there were quite some doubts about whether the ECB could be cutting rates before the US Federal Reserve. In fact, however, looking at other G10 countries, the ECB is now the fourth central bank to cut its benchmark interest rate. Prior to the Frankfurt-based ECB, Switzerland, Sweden and Canada had already seen rate cuts. We would draw three conclusions from the ECB's June rate cut. First, it's not the ECB's intention to become expansionary in order to stimulate the economy. Instead, Europe's central bank aims for a gradual scaling back of the restrictive monetary policy stance. In response to the inflation spike of 2021 and 2022, the ECB raised its policy rate by 450 basis points to 4%, which is significantly above current estimates of about 2% for the neutral rate. Now that inflation rates have retreated from double-digit levels, that gives the ECB more flexibility to gradually become less restrictive again. Our second takeaway is that for the first time in a year, the ECB has revised its forecast for 2024 core inflation upwards. In recent quarters, these projections had consistently been lowered, while this time they were adjusted up. In terms of inflation risks, the focus has shifted from goods prices to service prices. Therefore, wage developments are particularly relevant. The next round of important data will be released in August. Hence, we do not anticipate another rate cut already for July. In September, however, there could be the next rate cut, unless wage data were to argue strongly against it. Our third takeaway relates to market expectations. Following a significant correction, market expectations for the future path of interest rates appear realistic, if not even somewhat on the high side. At the beginning of the year, a policy rate of 2.25% was priced in for December 2024. Since then, this expectation has risen to now between 3.25% and 3.5%. Looking further ahead, the market expects interest rates to decline to 3% in the second half of 2025. Thereafter, the pace of rate cuts should slow significantly, and the ECB policy rate is expected to bottom out at approximately 2.5%. We would consider this assumption as realistic or perhaps even slightly on the high side. That concludes today's outlook. Thanks for watching and goodbye.